All right, guys, let's get into trading platforms. Let's just get to the next slide. So, how do we choose an ideal platform? There's a couple of questions you have to ask yourself. I mean, it really just comes down to what you want. When it comes to investing, there's really no one size fits all. So, you have your personal goals, you have your personal experience, you have your net worth, you have your annual income, and you have your personal savings. Once you really are able to answer these questions, you're able to decide which trading platform you'd like to get into. Now, if your goal is something to the effect of maybe you like to be an avid trader, maybe you want to buy at 9:32 a.m. and check your Bollinger Bands and check your technical indicators and see what the volume is and see what the MACD lines are and your relative strength and see where it crosses over. Well, then you probably don't need a really intricate system. You probably just need one that gives you faster execution. I mean, that seems to make sense. Or personal experience. Your personal experience in this. Have you traded before? What is the trading style you like? What is the features that have made you feel comfortable? What are they? And then look for something that's similar. What's your net worth? Net worth matters because there are some trading platforms that allow you to do block trades of $50,000 worth of Bitcoin, for instance, and there's some that won't allow you to do more than $500 worth. Now, obviously, if your net worth is in the millions, you're going to not really be interested in doing anything for $500. So, obviously, pay attention. What's your annual income? Your annual income is important, well, obviously. But even more so important because when you make mistakes or you risk your own assets or something doesn't go right, you need to know that you're able to earn your way out of it. Annual income comes into that. So depending on your trading strategy, which will be dependent on your annual income, that's how you're going to pick a particular platform, trading platform. And that goes for your personal savings as well. So what's the most important features? It goes back to the last slide. Maybe you want execution speed. Maybe you need added security. And what I mean by added security, that would apply to someone that says, you know what, I know what Bitcoin is. I know the price of it today. I know where it's going to go in 20 years from now, and I'm just going to hold it. Well, you're probably going to want a platform that's like Fort Knox, because if it could easily be taken out or they don't reinvest into that security, well, that's where you're holding your money. That's not good. Transaction limits. What kind of trading are you going to do? If you're doing one trade a day, you really don't need to pay for a platform that charges you for 10. You don't need to be on an active trader platform if you don't really need it. Transaction limits in terms of volume and quantity. If you are, again, a higher net worth individual and want to purchase 50,000 worth of something, you're probably going to want to go to the platform that allows that rather than the one where you have to spend, 70 days doing that. Available coins. This is really the differentiating factor. There, I believe, are 1,600 coins that are trading freely right now. Coinbase.com trades 5 of them. But then you have other platforms that trade all of them. It's a matter of what you want. Now, obviously, it becomes far more speculative. So say, for instance, you own Google.com, right? Google's worth, I don't know, $600-700 billion. And Google goes up 1% or 2%. And you're like, okay, you know what? I believe this sector of the market is strong. So let me find something a little more downstream that has the ability to double. Because for Google to double, it has to have $600 billion worth of new dollars into it. So you go downstream and you find that Ted, Mike, and Angela have a little search engine company in their, in their garage in Lansing, Michigan, whatever. And they decide to become a public stock, like these small coins do. And you say, okay, I'm going to get involved with them. Well, let's say Angela gets pregnant to Stu's baby, and all of a sudden the company flops. Well, you're going to be out all your money. The point of the story is, with less proven track records, with smaller companies, with smaller and newer coins, they could just disappear tomorrow. But let's say Angela was responsible and Stu was responsible and Stu didn't eat the extra oysters and Angela didn't have the extra glass of wine. Well, maybe she would have really stuck to her guns, or maybe she did get pregnant and that was her reason for, you know what, I'm really going to do well with this company because I'm going to do it for my kid. You don't know the variables, but the price of said assets is priced perfectly for all said variables. So when you go down the line and you start picking small coins, just buyer beware. So again, if that's your strategy, well, then you need to make sure your platform allows them. And fees, of course. I don't think I need to describe fees. So how do we get started? Well, you're going to find a trading platform and you're going to sign up. It's not really cumbersome. You put your name, you put your email address. Some might ask for your physical address, some might ask for bank account information, some might ask for your digital wallet, or they're going to ask you to sign up for a digital wallet so that you could fund it. But let's get back to basics. This platform is meant to facilitate the wealth that you have accumulated and convert it to some type of coin, and this is going to be the intermediary of that transaction. So to do so, there's obviously got to be some type of connection of bank account or digital wallet, depending on the trading platform you find. Obviously, you'll be able to pick accordingly. And then just decide, do you want to trade, do you want to invest, do you want to do both? Do you want to buy and sell all day like it's the Wild West? Leverage yourself up 100 times to 1. This coin goes up 1%, you just went up 100%, or this coin went down 0.25%, and 100 to 1 just brought you down 25%. You'll go gray very quickly. Or invest long term. And I'm not telling you which one's better. Ideally, you should, if it was up to me, I would say 70% of your money put invest long term, 30% of it buy and sell as you wish. Because you know what? Maybe you get a lottery ticket. I don't know. Maybe you're the one that hits. Maybe you say, okay, I'm going to buy this coin from Michelle's Rhino shop in South Africa. Who knows? And I don't know. Maybe she finds a way to find more white male rhinos, and that's what the company is backed by. But there's many different stories, many different ways. Just know what you want to do, and let's get it done.